So it's time to move to our next session. As I've told before, we are doing everything in different formats. The first one was the revival talk. The second one will be done in the same format. So it's my honor and pleasure to introduce you to Svitlana Chyrva, who is the country manager for Ukraine, Belarus, and Moldova Visa. Svitlana, thank you very much for coming. Good morning. Hello.
Good morning. One more time. Thank you. So since the beginning of the pandemic, the world has gone through all the known stages: denying, angry, disappointment, crisis, and adoption to the changes. So now we see the new normal and there is no turning back. However, acceptance is not enough. We need to understand how to move further. This is crucial for national economies to further develop and as well for the global economy of the world. According to the data of IMF, the global economy will shrink by around 5% in 2020, and in 2021 it will recover more slowly than previously expected. How should we act in the new normal? How should we move further? I would like to invite Charles Robertson to join our discussion. Charles is Renaissance Capital's global chief economist and head of the firm's macro strategy unit, a well-known economist and one of the top macroeconomic analysts in the emerging markets. Welcome, Charles.
Pleasure to join you.
To start with our visa...
I'm sorry for interrupting. Yeah. I might do that sometimes because of the sound. We need to make sure that the sound is good so everybody hears you firstly, and secondly, our interpreters have a chance to put it in different languages. Can you please put your mic a bit closer or somehow, put yourself closer to the mic? Would you do that, please? Can we do that? That's okay. It's a new normal. We're checking. We want to make sure that everybody understands everything and everybody hears everything perfectly. Charles, would you please say a couple of words so that we will make sure everything sounds good?
Yeah, absolutely. It's a pleasure to be at your Visa conference again. Thank you so much for the first time for me, but thank you.
To start with our Visa's forum headline, New Normal, New Challenges, New Cashless. What is the simplest answer to the question? What is the new normal for you, Charles?
I may be just repeating what everybody else has said, but it's to do with travel. I was having a debate with my wife a couple of years ago about me cutting down my travel, and I thought I would prove my point to her by counting every flight I took in the year to show that I was traveling less. And I got to 70 flights, 70, and I lost the argument. I was traveling far too much. And I think what this has shown us is that the technology was already here for us to do conferences like this, for me to talk to clients in America in the afternoon, Asia in the morning, and South Africa in the middle of the day. We could do that before, but we never did, and now we can. And I think this has helped accelerate a change that was already here.
Okay, so let's switch then to our questions. So what's happening in emerging markets and in markets of CCSIE? Will you share with us your thoughts, slides?
I will. Svitlana, you've been very kind to let me present this, actually do a presentation when you've told me that I should not do slides and should not do a presentation. Hopefully that's going to start showing in a second. I don't know if you can see anything yet.
Yeah, we can see your slides.
Good. What I was going to start with was a reminder of what Clinton's political advisor, James Carville, said in the 1990s. He said, I used to think that if there was a reincarnation, I wanted to come back to be reincarnated as the president or the Pope because they were so powerful. But now I've realized I would like to come back as the bond market, because you can intimidate everybody. Probably the most important thing in the global economy is to know what the cost of borrowing is for developed market governments. And America, the cost of borrowing is now below 1% for 10 years. And this graph that I've been showing investors for the last few years has been telling me that German bunds, that's the red line, are going to have been tracking, copying Japan, which is the blue line. And I think that will continue to happen. The German borrowing costs will be about 0% for the next 10 years. And I think that American borrowing costs will be between 0 to 2% for the next 10 years. Why? Because there's a lot of savings in the West, in the old West. Old people tend to save money, and because of the debt pile is so big now in America that if US borrowing costs were 3 or 4%, well, the country could not afford it. What this means is that American savers, Japanese savers, German savers are going to be desperate for yield. And I think they will be lending much more money to emerging markets in the next 5 to 10 years. Already in the last 20 years, emerging markets, the main ones like Brazil, Mexico, South Africa, Russia, used to borrow at 12 to 14% in dollars 20 years ago. 10 years ago, 6%. Today, 4%. And I think that figure may well go below 3% in the next 10 years. And that means that you can borrow a lot more money. So what you're going to see is emerging markets borrowing more to grow faster. And the cost of that borrowing will actually stay the same. I'm showing it in a table on the right-hand side. 20 years ago, if you borrowed 40% of GDP, your cost of borrowing was 5% of GDP. In 2030, if you've borrowed 180% of GDP, I think your borrowing costs will be just 5% of GDP. Now that's Russia, Brazil, Mexico, but I also think it's going to benefit Belarus. It's going to benefit Ukraine, Georgia, Moldova. Everyone will be able to borrow more cheaply. And not just in dollars, but also local interest rates are the lowest we've ever seen. Russia has never had interest rates as low as this in all of its history. Brazil has the lowest interest rates since independence 200 years ago. This is incredible. So I think you're going to have lower borrowing costs in Ukraine, in Belarus and Moldova, and Armenia and Georgia and so on. So banking is going to get much, much bigger. And that's got to be quite good news for Visa. In terms of the lockdown, in terms of the virus, I think one of the most interesting charts, this is very complicated, but we did analysis back in April. And what I realized was that owing to age, the older age of developed markets in orange on the left-hand side, the virus may well end up killing a great many people. We obviously crossed 1 million people just a few days ago. But the overall cost was going to be about 5 weeks worth of extra deaths in a country like Sweden. And curiously, Sweden didn't do proper lockdown, and the popularity of the leading party has gone up during this crisis. It's been less painful for countries in the CIS, in yellow, and even less painful in Africa. And the numbers, actually I show them on the top right of this slide. The numbers of deaths in Russia from COVID are about 1% of what Russia normally loses in a year. Anyway, there's normally nearly 2 million people die in Russia every year, and COVID has killed 20,000, which is a tragedy, but it's helping explain why I don't think we're going to get lockdown again in Ukraine, in Armenia, in Belarus, in Russia. I don't think we're going to see the same shock on the economy. The big change, and this really matters for emerging markets, this is a big deal, I'll explain why. is that it will change the US presidential election, as Francis Fukuyama just said. Every US president who has fought an election to win a second term, every president has lost if there was a recession in his first term. Even if it's not his fault. No president thinks a recession is their fault. President Carter in 1980 did not think the Iranian Revolution was his fault, but he still lost because unemployment went up. And that is the problem for Trump. So he's going to lose. And why does that matter? Because what's happened under Trump is that American companies have stopped investing abroad. That's the blue column. How many billions of dollars have American companies been investing abroad? Last year, it was just 100 billion. The year before, in 2018, American companies brought the money back. Meanwhile, globally, Europeans panicked about Trump imposing tariffs, and they put $250 billion into America last year and the year before. What did that do? It meant that the dollar was strong. And a strong dollar is never good for emerging markets. What I think is going to change with the Biden presidency is that American companies will start to invest abroad again, and Europeans will not worry about American tariffs. They will find cheap places to do business. This chart you probably won't be able to see, but the numbers are too small. But the minimum wage in Ukraine is about $175 a month in June. Now, in China's richest province, it's $350. Now, I think Ukraine looks really good value if you're a foreign direct investor. And it's partly because the population is so well educated in Ukraine and Belarus and Georgia and so on. If you go back to 1990 in China, 1/3 of Chinese could not read or write. They were illiterate. When I was in Kiev in 1991, during the coup actually, everybody in Ukraine could read and write. Many people had gone to university. It's a much better educated country, and it's got cheaper wages. I think we're going to see investment in Eastern Europe. But the big picture is this dollar-euro trend. The dollar has been strengthening for 10 years, and that's been a tough 10 years for emerging markets. I think the US election will change that because of foreign direct investment, but also the virus will change this because of the higher debt, meaning low bond yields in America, meaning American savers will put more money into emerging markets as well. So I think the dollar goes weaker. People are going to put money into emerging markets. I'm showing this, another complicated table, I'm sorry, but Russia's currency, we think is 0.91 of its average. What does that mean? It means it's 9% cheap. And lots of currencies we think are cheap in the region. Azerbaijan, 5% cheap. We think Ukraine, 7% cheap. Kazakhstan, 20% cheap. So I think investors are going to be looking to these countries to put more money to work. And actually, we've had some good news. Remittances to Georgia, to Moldova, have been up about 20% in recent months. If we look at exports, Moldova's exports have done well. Why? Because in a lockdown, we all needed to drink a lot more wine, and if we smoke cigarettes, smoke a lot more cigarettes. Tobacco and wine have done well. And I think that's going to be helpful for their economies too. I am a little worried about Europe having more lockdowns. I don't think it will happen in most emerging markets or frontier markets, but Europe does account for about 15%, 15% of GDP of Moldova Ukraine and Belarus. So there could be some weakness just in the short term. But after what will be a difficult year this year, we think GDP will be down maybe 2% to as much as 6% for some of these economies this year. Next year, we think they're going to be growing by 3 to 6% in most cases. So the recovery should be good. And in the long run, over the next 10 years, I'm looking for countries like Ukraine, Azerbaijan, Moldova to grow by 50%, to be 50% bigger in real terms in 10 years' time. It's going to be less for Belarus, by the way, and this isn't because of politics, it's just demographics. The population is getting much older, much quicker in Belarus, and I think that will give it a lower number. Well, there's many more children and young people in places like Uzbekistan and Tajikistan, so they'll grow faster. So I'm going to stop there, I think. But the big picture story is we're going to see foreign investors putting more factories into Eastern Europe. We're going to see foreign portfolio money coming into emerging markets in a much bigger way. And I think both of those factors are going to help drive stronger growth after what's been a difficult few years for most of Eastern Europe. So that's the big picture from our side at Renaissance Capital.
Thank you, Charles. It seemed that a lot of good news we heard from your side, so especially on the possible investments in our emerging markets and the cost of the borrowed money, so which will go down. And you know, the question which I have in my head, so actually if we witnessing actually the deglobalization, how, in your opinion, it can influence on further development of our countries?
That's a really good question. About 2012, I first tweeted about this protectionist theme. I'm very excited on Twitter. RenCapMan is my Twitter account. I'm always there. I was very worried about this protectionism. It felt like a shift in the global thinking from a globalization story of maybe 30 years long, that we were going to head towards more protectionism. And the Brexit vote and Trump's election were part of that. But it doesn't actually make people better off. The protectionism that Trump has done has failed to create a significant number of extra jobs in manufacturing. And I think his defeat in this election in November, assuming I'm right, is going to help change that story. And we will go back to a more globalized world. I'm not saying that American trade relations with China will be amazing. I don't think they will. There will be tension there. This is the big dominant power dealing with the rising power of China. They're going to have tension. But what should the Chinese do about that? They will do what Japan did in the 1980s. In the 1980s, it was Reagan who was attacking Japan and imposing tariffs on Japan. It was Reagan who was trying to stop all of these flows of trade and investment. And the Japanese invested abroad. They invested in Thailand, in Indonesia. They set up factories around the world. And I think that's what you will see from China. It will be Chinese investment that helps lift global investment.
Good. So talking about the sectors of economy, so actually, on your opinion, which sector was hit the most? And probably which sector will be developing the quicker than the others on your, what do you think?
It was back in January, February already, we were talking about the hit to tourism, but the numbers were even worse than I ever expected. So Egypt tourism numbers were down 100%. The entire industry just died for months. The first people who were brave enough to get on planes, to go on holiday in Egypt, were Ukrainians and Belarusians, by the way. The first 12 planes that went to Egypt in July, 11 of them came from Minsk and Kiev. But the numbers were still down by 98%. So that's been a real blow. Retail sector. People have done more and more online shopping, as you know, and hotels. All of this has been in deep trouble. And as you know, as we all can see, IT has been a big winner. Which is kind of good news. Sorry, it's good news for people who are good at IT. And Belarus is famous for it. So is Ukraine. It's one of the skills of the former the CIS and surrounding countries.
And since we are talking about the future plans and the further development, so how do you think which sector will grow the most in the nearest future?
Well, I think one lesson from all crises, all wars actually, is that people tend to fight the last battle. They fight the last war. And so for the last 10 years, global leaders have been focusing on stopping another financial crisis. But that wasn't the threat. The threat was the virus. I think in the next 5 years, governments will probably spend too much on trying to prevent another virus. But the risk of another virus like this one in the next 5 years is very low. So I think there will be big growth in health spending, but it's probably not actually what's needed ahead of the next crisis, but I'm not quite sure what the next crisis will be.
I hope too. So, I have one more question before we go to the question to our visitors. So actually, a year ago, we could not imagine our Cashless Forum on the virtual format. And now this is a new normal. And no doubt that technology is one of the sectors that benefited from the pandemic. As people adopted the world, it's even more reliant on technology. So we are feeling comfortable in this virtual studio. So, and here is the question. So what issues do you think we need to be addressed? Trust, privacy, any others?
Those, again, really good question. I'm not the best person on this. I think these are ethical and philosophical questions as well. And there are people much better than me able to talk about that. But I think the security issue, the concern about having your own internet space that you feel able to control, that's clearly a big deal. And you've seen the clashes with China and Huawei, and I think those are going to continue to be areas of concern. So there's a security aspect, and I think that's going to be with us forever.
I fully agree with you. So thank you. So let's ask our viewers just...
Thank you very much, Svitlana. Thank you very much, Mr. Robertson. Please stay with us because we have, as you know, we have a Telegram bot with questions coming from our viewers, our followers. First of all, thank you for a fantastic coverage of how really pandemic influenced the world in different countries. It was very, very educational. I'm sure that a lot of people will rewatch it to know how to move forward later after that. So the first question is, which countries do struggle, if you put it, say, on weight, right? Which countries do struggle with COVID-19 crisis the most? Emerging ones or the developed ones?
Well, interestingly, I think it's the countries that have been worst hit are all in Latin America. And they are the countries where deaths have been between 10 and 20% of a normal year's deaths have already happened because of COVID. So Latin America has had the worst time. I think it's been interesting to watch emerging markets because countries like India, Pakistan, South Africa, they tried lockdown and it didn't work. So in some ways, it's easier for them now. They know it's not possible to do lockdown and they just have to learn to live with the virus. It's still not that easy for Europe and the United States to know what the best policy is. And I think it's actually proving more difficult for them politically as a result.
Thank you. So to follow up that question, there's another question. Which scenario should emerging markets follow to get maximum profit from the COVID-19 consequences?
I think governments should be thinking about how to refinance their debt, because I think the borrowing costs are going to go down a great deal. I think what will happen after the US election is that the big pension funds in America, who have trillions and trillions of dollars to invest, will start to allocate more to emerging markets. And governments should take advantage of that to borrow more cheaply, to pay back the expensive debt they issued before and start replacing it with cheaper debt in the future.
Thank you very much, Mr. Robertson. I will take the liberty of asking the question from myself. With your expertise, I guess you're the person who would really give us the perspective on that and the understanding. If you were to do the top 3 of the industries that suffered the most because of the COVID, and top 3 industries that really benefited the most of this pandemic, what those top 3 would be?
To repeat the point I was saying earlier, definitely it's been the tourism sector, it's been retail, it's been hotels and restaurants. I think in terms of the recovery, though, I think we will get back on planes again. We are social animals. We want to meet people in person. We want to see new places. I think there will be strong recovery there, but I think retail will be more of a problem. I think we'll get used to shopping online. And the IT sector, it's taken a leap forward, a bit like aircraft technology in World War I or World War II. You have a big crisis and things get much, much faster. So IT, communications, all of that, I think, is going to change. And probably finance will be one of the areas that can change the most over the next 5 to 10 years.
Thank you very much, Mr. Robertson. It was really educational. Thank you for your time.